earlier during today, and I think during the course of yesterday evening, there was quite a few references to imports into India. Peas is one of the major imports, and as we've just finished some country presentations, and it's good to have some perspective into what's going to happen in the global pea market. We have some of the movers and shakers behind the global pea market here. To my right is Chad Popovich, head of pea trade at Glencore Grain, and then we have Anurag Tulsian, you're a board member at Sisal Septic, isn't it? And Varinder and Brett Dobson as well. So basically, we'll feel free to ask questions if at any point during our discussions there are some issues that you need answers to, or anything that's been said that's not clear. Let me start off with first asking a question of Chad. The continuing refrain over the last 2 days has been the transport bottlenecks, and a lot of this is dependent on how the line companies, as the likes of Glencore, JR, Patterson and Cargill are referred to in Canada. And for them it's a question of allocating resources, and over the last year or so, wheat has been the star performer. So as a result of which, everything else that is going to be exported out of Canada took a back seat. Chad, how do you see this going forward? I suppose the bottleneck of transport will get better going forward, but how do you see the allocation of resources?
Thanks, Vijay. I guess when it comes to logistics issues in Canada, first off, I think that the logistics will improve a little bit. Not anytime soon. I think more so probably in the summer months of June, July. In saying that, they will improve slightly. It still comes down to terminal capacity at the end of the day, as Vijay mentioned. I think it really comes down to the demand from a global scale. When you look at wheat and canola as well, there's excellent world demand, and Canada has proved to be the cheapest out there for the most part. So that has dedicated a lot of the Canadian terminal capacity to those two commodities. I really don't see that changing all that much. I can speak for the canola side. New crop is being sold very aggressively already out of Canada for canola. That is already taking up a lot of the terminal capacity. It's going to continue to do so. The demand will continue to be strong, and in addition to that, it's also happening on the wheat side. So I really don't see much changing all that much. When you look at Canada, there were very big crops this past year. We just cannot move everything, and then it comes down to demand. It comes down to the price to the farmer and his cost of production, and what he wants to move and what he wants to store on farm. In a perfect world, I think he'd want to move everything. To be 100% realistic, that's not going to happen. So I just don't see the issue really getting better probably until mid-2015, in my opinion.
So going forward, you still see rationing of supply of bulk peas into wherever it needs to go?
I believe that there will be a steady flow of peas, but in previous years, we would see maybe 6-7 vessels in a month out of Canada shipped. I just don't think that's going to happen anymore. Maybe you see a little bit, I guess, more aggressiveness, I'll say, or larger shipments early in the crop year. But still, there's such a big carryout that everyone is fighting for that terminal capacity. So I think it's going to be more of a steady flow, which probably helps a market like India at the end of the day with spot values anyways.
Anurag, this would mean that the Indian buyer will have to change his buying pattern. Normally, the Indian buyer has always been a spot buyer. Because of these issues surrounding transport and logistics in Canada, you're going to have the buyer going forward more and more forward, leading to more uncertainty, more risk. How do you think the buyers will react to it, and how do you think we can manage that, the volatility as a result?
Thank you, Vijay. Basically, you are very correct. Until now, we've been used to buying and selling on fairly spot basis, wherein we trade generally the next month or the third month. But due to these logistical problems in Canada nowadays, it's impossible to get something very nearby. And as you also are aware, a lot of business has already been done for basis new crop August, September, October positions. Of course, this entails a lot of volatility as regards currency is concerned, because the Indian rupee last year, as we saw, it really had wild swings. But again, the buyers also are getting a bit more accustomed to this, and they are now going into hedging. At least some of the bigger buyers, they hedge their positions accordingly. But this definitely will remain a trend now for some time, and we'll have to get used to the fact that we will not get something nearby very quickly, at least as regards the bulk vessel positions are concerned. On the container side as well, it is again a difficult position, and we are not getting anything for a nearby shipment, at least from Canada. And we've done a lot of business basis May, June, July, August going forward. And sellers also are being extremely cautious, and instead of a usual 30-day period, now the trend from Canada is now changing to almost a 60-day shipment period, because they also don't want to take chances wherein if shipments are delayed, they don't want extensions later on, and markets being so volatile, they don't want to be caught at the wrong end. So buyers also will have to get accustomed to the fact until and unless these logistics issues in Canada are settled. And yes, it is difficult, but then I think we'll have to live with it and work accordingly. Thank you.
Varinder, you have anything to add to that?
Well, I feel that market will continue to be steady despite of all these hassles, because Indian buyers have also changed their buying pattern. They initially had been taking larger positions, if so to say 2 years back. They have been sitting on 20,000, 25,000 tonners vessels, each person importing it. Now they have cut down to a size of 10,000, 5,000, in a multiple of 5,000, I would say, or 10,000 max. So that has to an extent steadied the market, what we have seen in the last 6 months. That the supply, despite of supply being tight, the market really did not jack up much, and it did not go down as well. So it has fairly steadied down over the last 6 months, and this pattern will continue for the next 6 months as well. That's what my reading is.
This year they're also talking about a very good desi crop as well as a good yellow pea crop in India. Do you think the recent rains have affected it, and how do you see the desi yellow pea price link going forward?
Basically, the last year's crop, which we were told was around 500 to 550,000 tons, and this year we were expecting it to go up by almost 30 to 40%. But from the estimates which I get from the trade, we should be expecting a crop size of maybe 600,000 tons this year. There have been some damages, and as Varinder also said, I think the markets on peas, at least, I think it should be steady. Maybe it will be bearish for the next couple of months or 3 months, because irrespective of the crop size, there will be harvest pressure in India, and it is felt always. But post maybe May, June, July onwards, the market should then again become steady, and we should see some good markets.
I think chickpeas will also have an impact on this, because chickpeas is already trading at below MSP levels. So that will also put a stress onto the yellow prices, so they would remain where they are as of now.
Right, over the last few years, you've had the dun pea production in Australia sort of either static or go down, as a result of which, even in markets like Bangladesh and possibly except for Tuticorin, dun pea is not something that is readily acceptable as a substitute. How do you see the dun pea production in Australia, and do you see some reaction in Australia, particularly because of all the transport delays in Canada? There may be odd opportunities coming forward. How does the Australian farmer react?
Thanks, Vijay. Yeah, you're right. Over probably the last 4 years, especially since probably 2010, 2011, where we had a crop of 450,000 tonnes, and we managed to export nearly 300,000 tonnes of that to various countries. Since then, we've had a change in our structures as well, and port capacities, which has had an influence on the pulse side of the business. To be able to lock away a shipping slot is very difficult because for timing wise you're not sure when India or Bangladesh or another country would like product. So to be able to buy a shipping slot going forward is something that's very difficult to manage. Since then we have seen a decline, weather conditions, market forces, where our crop has shrunk. Traditionally South Australia would produce somewhere between 180,000 to 200,000 tonnes. The last 2 years I'd say that's now falling down to more likely 120 to 130,000 tonnes. And as Peter alluded to earlier in his speech, this past year we've seen with Dunpea prices sliding on the back of probably Desi chickpeas sliding as well, our prices got down quite cheap to about 275 to 280 Aussie dollars in South Australia, and we saw a lot of the stock feed manufacturers start buying and very aggressively. So we've seen an increase in that side of the business. So the crop has shrunk and we've seen an increase in stock feed demand. Obviously, over the years, our market share into Chitty, Corinne and Calcutta markets for Dunpeas has been eroded because of yellow peas, and I think that's probably made more difficult for Australia to be able to move volume. And so today, most of our product is moving by containers. There is the odd bulk vessel that gets done, but it is difficult to manage, as I previously said.
China has been thing that's been left out of discussions until now, and late last year when the Indian rupee suffered a heavy devaluation and there were requests from the Indian buyers to defer shipments, China stepped into the breach, and if you follow the statistics until December, the export from Canada was nearly about 1.1 million tons, of which a substantial portion went to China. Thankfully, and that was a relief to yellow pea traders like ourselves. Chad, how do you see the Chinese demand? Since then, I think China has tapered off because they over-imported during that period. Do you see the Chinese coming back into the market, and do you see them as strong consumers in the years to come?
I guess first off, yes, there was a lot shipped to China very early. They were in the market for new crop last year before India or anyone else was there to buy. They loaded up between that August and December timeframe, and I believe there's just over 500,000 tons shipped to China from Canada in between August and December 2013. So historically very, very strong. We will see, and even from an overall number, not just China, but an overall number of exports out of Canada, the exports will start to slow down. We've seen that in January already, and I think most of us know what is in the lineup for the next few months. So the export pace will definitely slow down, meaning China is going to be taking less as well. So, at the end of the year, I think China will probably end up in and around that 750 to 800,000 ton mark of total peas, majority being yellow. And so there are some shipments still to come over the balance of this crop year, but definitely the export pace will slow down. When you look at the future, I think the past 5 to 7 years are a glaring point that China's there to buy. Everyone speaks of China surpassing India when it comes to buying yellow peas and what they're going to be importing on a year-to-year basis. I think over the next 2 to 5 years, we're probably going to see China import about 1 million tons of Canadian peas. So I think the demand is going to remain strong, and they could surpass India sooner rather than later when it comes to imports.
Thank you. Last year also, around the April-May during Cecil's, there was a lot of talk of good Russian crops and how there will be enormous quantities coming out of Russia. But somehow that whole thing dried up, and I think Russia exported something like 120,000 tons with maybe 1 or 2 bulk vessels. Do you, it seems that there were some rains at the time of harvest which damaged the crop. Do you see the Russians sort of cutting back on their seeding as a result of what happened to them last year? And how do you see Russia as a constant supplier going forward? Because don't forget, the prices have also come down, and Canada seems to be a more efficient producer of yellow peas?
You pretty much answered the question for me, but just to put a little bit more into it, I was one that looked at the Russian crop last year, and on paper it was very, very large. I think originally we had about 2 million tons of yellow pea production out of Russia. Really, we were searching for where it was going to go. You know, the feed market wasn't that strong at the time. On paper, it looked like, you know, there was going to be massive exports out of Russia, and in addition to that, a huge carryout. As Vijay mentioned, there were some weather issues during harvest and quality issues. A lot of that product has been consumed domestically, and the production has been reduced on my personal S&D anyways, down to about 1.6 million tons. In saying that, Russian prices are very, very expensive. We haven't spoke much about French, but you know, in lines with French prices. The demand for peas within the European region has actually been very strong this past year. Besides a little bit of product that moved out of Russia to India early in the year, there has been nothing over the past few months. You know, going forward, I think it all comes down to price. You know, you look at, let's look at old crop. You look at old crop peas in India for Canadian origin, and you know, to give it a price range, you're probably somewhere in between $385 and $400 CFR equivalent. If someone were to look and want to buy Russian peas today into the Indian subcontinent, you'd be close to $450 CFR. So the price is the price, and it's just not going to come to India. And I think it's similar to new crop. You know, you look at new crop peas out of Canada. I've heard prices as low as $365. Again, I'm a buyer at $365 if anyone is offering that, but $365 to, you know, call it $375 for new crop Canadian. If you wanted to buy Black Sea Russian peas today for new crop, first off, you can't from the farmer. If someone were to take on a position or be a little bit aggressive selling, assuming that the farmer may sell eventually, I think the absolute cheapest, I would say $370 to $375, but I firmly don't believe that we're going to see those prices out of Black Sea.
You also see the pressure of slots in Canada for the new crop as well. From what I understand, everything is sold up until August. So any shipments that take place will have to take place going forward from August.
True. And really what we're trading is capacity. It's logistics and capacity. This past year, even into next year, you can throw the S&D out the window because it honestly means nothing. That's from a Canadian standpoint, it really doesn't have much teeth this year because you're really trading the logistics and the terminal capacity out of Canada.
One of the things that we realized this year was at a certain price, the Indian farmer is also incentivized to produce yellow peas. So if you looked at the Indian prices around 25,000 to 26,000 rupees, it seemed to be attractive for the farmer in UP and elsewhere to produce yellow peas. Do you see that going forward, something that's going to continue as a result of which there may be a supply side response in India?
I did not get your question, Vijay.
So what I'm saying is there a price at which the Indian farmer will be incentivized to produce yellow peas? Because of the devaluation of the Indian currency, even at $400 or whatever, you're around the 26,000, 27,000 rupees of yellow peas into India. At that price, is it worthwhile for the Indian farmer to change his
No, I will not be very
peas?
hopeful, honestly, because the fact is that they have the choice of other crops which give them better remunerations. It's wheat or rice or anything else, because they have the concept of MSP, and in all probability, all the times, all these crops sell at a price at par with the MSP or even more. So they are, in any case, are more inclined towards the other crops than the pulses as such, as a whole. So I don't see, a small shift in price of a rupee or two would really give them any incentive to go for pulses.
Anurag, what about you? You have something to add on that?
I too would agree to Varinder's argument, and I also believe that the farmers here will not shift easily, or they would not grow into plant more of yellow peas, because they are much better off growing the cash crops like wheat, rice, and they are more secured. until and unless, as we are also discussing with the government here, the association is discussing with the government that we include pulses in the food subsidy bill and allow it to be distributed through our PDS. If that happens, yes, the farmers will have more conviction to grow more pulses because they'll be assured of a market surely once they come out with these crops. So until then, I really don't feel that the farmers will really go in and increase their farming and cultivation of pulses.
Is there a level at which the Australian farmer would produce more dun peas, and is there a level that you would look at?
No, Australian farmers don't chase or they use pulses in their rotations for a reason, and dun pea acreage has stayed fairly stable in the last few years. Our biggest increasing or decreasing in tonnage is because of yields, which is our weather conditions. Obviously, if the price went from what it is today, around 325 to 330 Aussie dollars to $400, well then yes, it would drive more acreage and displace another pulse out of their rotations. But saying that, they can't change that tonnage dramatically. One, seed availability, etc.
I want to throw the floor open for some questions. I'm running out of all the questions that I have, so I need some help here. Pradeep.
Rob Brearley, just generally to the panel, I think there's been a lot of discussion about the pricing of peas for human consumption and so forth, but I'm hearing a bit of consistency in Australia, perhaps out of Russia and Europe and so forth, about the growing demand for stock feed. And I guess peas at these prices are starting to price themselves in from a protein perspective. And I just wondered whether the panel might comment on, first of all, whether there is a growing trend back towards stock feed use at these lower prices, and what that impact of that might be on prices going forward.
Chad, do you want to take that one?
Yeah, I think it's a good point. Early in the year that wasn't the case, but as the years progressed, we're definitely seeing feed demand. You can see it in the prices of French and Black Sea peas today. So there is good demand. If there was capacity in Canada for old crop, peas would work to Europe. Yellow peas in Canada would work to Europe quite well, actually. So, what happens next year, I guess it is comparative to other feed products, but over the course of the past few months, and I think for the next few months going forward, it definitely works into the feed channels quite well.
Pradeep, you had a question?
Yeah. Mr. Vijay, I have a question. We have covered Russia and USA, Canada, but we have not covered France. So if I would like to know what about the production of France and the price idea and the shipment period, is there any possibility for India?
Chad, you want to? He's asking about the production in France, and what do you think of exports out of France?
Okay. The production in France expected, I guess, for new crop is somewhere in the neighborhood of 550 to 575,000 tons. Of course, nothing is seeded yet, so that is up for debate and could change. Looking at this past year, zero exports to India specifically, or the Indian subcontinent. All of the French exports have ultimately been throughout Europe. And primarily that is for the feed channels. There's been a very, very strong domestic use of peas within France as well. But I'd say overall, I guess, year to year production about the same. I would maybe argue that because of prices, we could see an increase to production a little bit by maybe 10% or something like that. So I don't have the exact figure of this current crop, but I think it was about 525 to 545,000 tons, and we're expecting somewhere in between 550 and 575 for the new crop coming up.
Actually, over the years, the buyer in Asia has forgotten what French peas look like. So I guess even this year as well, you might get possibly one, maybe two at best, cargoes coming this direction.
That's quite positive.
Chad, one question. What are the carriage numbers for the coming year for peas cargo?
Out of Canada specifically?
Yes.
Just so I get the question right, the carry-out in Canada, is that what you asked?
Yeah, yes.
Okay. It's estimated around 500,000 tons out of Canada for yellow peas.
I think this number has tended to vary a bit, but I'm not sure that's of any consequence because if you cannot ship it out, it remains in Canada, so it's not going to make any much of a difference to global S&D.
Yeah. And really, just to add 500,000 tons, 700,000 tons, you know, it's in the grand scheme of things, you know, you look at the wheat crop out of Canada and you're going to have a 13 million ton carryout. So peas is they're insignificant almost.
Chad, I have a question for you again. With 500,000 or 700,000, as we hear, it could be as high as 1 million ton. If these numbers are there in carry, and we understand from our friend from Saskatchewan that the acreage is going to go further up, do you see any pressure coming onto, because then we feel that this number of 370, 375, what you are saying, will not be realistic and we might see a dip of another $15, $20. Do you see this as a possibility?
Well, you have to look at the cost of production in Canada as well, and the values in Canada have fallen off significantly to the farmer. So, you know, how much does he sell when he's not making any money with his cost of production? So you have to look at that too. You know, the values today of what we're paying the farmer are very close to his cost of production. So, you know, do you see a real push, you know, late in the year because he has, let's say, take worst case scenario, 1 million tons of peas on farm? Like I just said, he's also got 12, 13 million tons of wheat. So I think he does have to look comparatively at the world prices. He knows that he can't sell everything, and he's going to look to see what he can get for the best value and sell that. Because, again, you know, looking at history, maybe 1 million tons of carryout is large for Canada, but with all the other crops on farm, something's going to sit there and wait. You know, everything cannot come to the terminal and everything cannot be exported out of Canada this year. It's a fact.
Thanks, Chad.
The other thing is new crop, as some of the speakers have mentioned earlier. With new crop, you don't know what the yields are going to be. And most of the projections that have been done with average yields. Last year was an extraordinary year. Yields were good in practically all the crops out of Canada. It's around 1:15, so I want to do a last round of questions around, basically, it has been the tradition here to do a bit of crystal ball gazing, and something that I want to do in terms of pricing going forward. There are two components to the question. One is, what do you think of prices going forward, and where do you think the consumption in India starts increasing? Is there a price at which the Indian consumer thinks that it's an attractive enough price to go in for incremental consumption? So can I start from my right, Virendra?
Well, it depends, on certain other pulses as such. Of course, the desi chickpeas and tuar also to an extent, because yellow peas would be substituting them. And if their prices go up, definitely we can say some upsurge in the prices. But looking at the present day scenario, I see a dip, honestly, of about $10 to $15 to the prices which are being quoted at this level, 370. Given the logistic conditions, once they open up in July, so there would be a larger supply base available with 800 tons of carry over and the new crop and pipeline. So then I think there would be a slight dip in the prices until and unless local prices of other pulses go up.
Brett, you want to hazard a guess?
From an Australian perspective, it's very difficult. There's no new crop pricing out there, but trying to look into my crystal ball, it depends a little bit what happens in Australia with the desi chickpea crop. If it does continue to stay dry, then that will have a knock-on effect in the desi market, which will then potentially have a knock-on effect.
Dollars from here downwards, but at the same time we have to factor in that if the Canadian dollar weakens, then the Indian rupee also will weaken, commensurate. So then again, if the prices in dollar terms say come to 340 even, but then the rupee equivalent also will go up. So it's very difficult to hazard a guess. At the farm level, yes, the farmers will probably get the same prices, but then a lot will depend on the currency as well.
Thank you very much. I think we've had a very interesting round of discussions on the yellow peas. I don't see any questions from the floor, so I guess we have answered practically all the questions that can arise. I think we are in a very interesting market. If you look, the logistics in Canada are predominant at the moment. So the only factor that one can look at would be what is available in India and what can possibly be shipped from Canada if you're looking at old crop in the next 2 to 3 months. I think that's very, very limited. You'd be surprised at the lineup and the number of vessels that will be coming. I would say possibly 4, maybe another 1 could be squeezed in, but I don't think there is that many vessels in the lineup between now and August. So you're going to have sort of extremely rationed supply from Canada. It has to cater to China, it has to cater to India, and it has to cater to Bangladesh as well. So that is a limitation from the Canadian side. The Indian new crop, everybody's been talking about a very, very good new crop. But like most things in India, you have to see it before you believe it. And it's something which we have to see what happens in the next few weeks. So the dynamics of the market are very, very interesting. From my own perspective, I would be bullish the old crop because I think there aren't that much supply. There is not that much supply coming in from China. Going into new crop, once again, the capacity constraint is something that is going to determine what kind of tonnage comes into the Indian market or into the world market in general. So that's something which is going to hold whatever that comes in. Buyers, as we mentioned, really will have to change their buying pattern. People will have to start thinking a few months forward, and hopefully that results in orderly markets and everybody in the supply chain benefiting without too much volatility. On that note, I'd like to thank all the members of my panel here.